thing. And okay, I think we are good. So today we are going to go into and look at our training series on how to be a master trader. And the first volume that we are going to go into is identifying zones and levels. So let's kind of jump into it. The first step of understanding when you're trying to trade something is identifying what the level is. That's the most basic part of it, trying to keep it less complicated. Trading shouldn't be extremely complicated, and you don't want to mess things up by introducing too many things, especially when you're new. And so that's pretty much what we are trying to go over, is understanding what are the very basics of when you start trading, and that's primarily levels. So what is a level? So a level is basically an area of rejection, which could be classified as a support or resistance, depending on what direction the price is moving. If the price is moving up and it gets rejected somewhere at the top, that could be the area of rejection. That is something that you would call as a level or a zone. Same thing when the price is moving down and it gets rejected, then that would be called as an area of resistance, as support, sorry. Now let's look at the chart. So basically, let's look at an hour for you to understand some of those points. So now, for example, what price is doing here right now is price dropped down in the previous day, and now it's at a support area, basically right over here. And this is what we would call support. It is forming support as well. So it's struggling to go down. That's the indication. That's an indication for a rejection. So you can have rejection in two different forms. One is price reaches a specific point where it is trying to break through, but it is either unsuccessful or successful in breaking through, or price reaches a specific area, for example, right over here. It reaches there and it instantly gets blasted up to the top. Now that could be because of news or because of any kind of fundamental event, or simply because the level of the type of rejection it is, or the type of zone this is, and we'll look at that as well. So what are the different types of levels? That's an extremely key idea to understand. What are the different levels that you would encounter in taking a trade? So there are major levels, or key levels as people call it. So you'll hear this is a key zone, this is a key level, this is a major area of rejection. There are different ways they can call it. That's a major zone or a key level. Then there are minor zones where there's infrequent areas of rejection, a few wicks here and there, or a few bodies here and there. So they don't necessarily need to be followed, or price won't necessarily take support or get rejected there. It could break through, it could move freely. It's not a level that would ever need a news to break through, right? That's not a level where price would struggle to break through and would need news to help it break through. And then psychological levels. So in condition of gold, it could be 2000 at an increment of 25, with historical movement already there. You can expect it to be sort of like 1900, 1950, 2000, 2050, and so on. And when price, and this is something to note, when price reaches an area where we're expecting an area of rejection where price has never been before, a historical high, that would generally be considered. So say, for example, the first time when price broke above 1981 was in July of 2020. At that point, this is where you would expect that, okay, since it's broken through above, what's the next psychological level that price could face a struggle to continue keep going up? That is 2000. That is one of the psychological levels. So you can see that in the future here, we are seeing a level of rejection around 2000. However, on lower time frames, we might see more of it since we still continue to break through. Once 2000 is broken through, what's the next level? It's going to be 2050. So let's look at 2050. So this is around 2050. So this is where we can see that price definitely couldn't close above 2050 and faced an issue in closing above. And that is one of the psychological levels. Then comes the increments of 25, as I mentioned. This is where you would see, now this is where 2075, this is where price rejected initially, and then an increment of another 25, that's 2100, that's the current target. If price is to go above and break 2075, that's where it's headed, 2100. That's the first area of rejection that's expected. Then 2125, 2150, 2175, so and so on and so forth. Okay, that is what a psychological level generally would be. Now, next step of understanding is what are these levels and why does price respect it, or what are these formations and why in general price follows it? Well, it's basically prices. So the markets are all about buying and selling, right? Somebody's buying and somebody's selling, and that's the reason that the market is moving. So when we see a massive drop, we're seeing that there's a sell-off. What does that sell-off mean? That means there is someone that's going at a loss. Somebody bought here, and there were a lot of sellers. Well, not necessarily a lot of sellers. There were more buyers, and when there are a lot of buyers there at a specific point, however, fundamentally, some of the major institutions, they're pretty much selling off. They're collecting their profits. When you say they're selling off, they're collecting their profits. They're always trying to go bullish. Right? Institutions are generally trying to go bullish. However, retail traders are the one trying to go bearish. So in this situation, retail traders lose a lot of money. That's where the banks make a lot of money, or the institutions make a lot of money. And these are specific levels where it could be a key major level where banks or any other institution generally tries to collect most of their profits. So those levels would generally occur quite consistently, and you would see that across different time frames. Now, when we're trying to identify these levels where we can expect some level of rejection, either major, minor, psychological, whatever it is, you're always going to look at different time frames to get to know what's moving. And why do we do that? Why should you look at different time frames? Well, it's extremely simple. Different time frames it's basically, if you look at 1 week, 1 month, and 1 day, these are higher time frames. So what happens on the monthly, if you find a rejection area on the monthly, that would have to be, that's a higher probability that it would be followed through or it would be observed on the lower time frames. So then we go into the weekly. If you find levels there, higher probability than the daily that those levels will be respected. Same thing for the daily when you compare it to the lower time frames, that is 4 hours or 1 hour. And these are the time frames that give you some of the major levels of resistance and support, key areas, key zones, right? And that is what we're kind of trying to get into. So if you're new to trading and you have no clue how to trade at all, this is the simplest way that you can start. Obviously, you should always use the demo account to start trading, learn a lot of things there. However, this is also something that you can obviously always consider as a part of your trading method. Once you draw zones, once you look at key levels, you look at historical movement, you look at historical rejection, it gives you a huge perspective as to what the story the price is telling you of. There's always a story that price is telling you. Technicals and fundamentals, these are the two major concepts that is the basis of trading, right? Fundamentals is basically the economic events, the economic conditions within an economy, depending on the pair that you're trading. So right now we have an open chart on gold. Gold traded against US dollar. Now we're looking at US dollar as the primary currency. What's happening with USD? That means what's happening with the US. So within the US, if there's an issue, there's recession, there's war, or whatever, that would be reflected on the charts, and the economic situation and the trust of international investors and countries into the currency itself is reflected against gold. So gold would go up if US dollar is dropping. If US dollar is going up, that means investors are investing more into the dollar. Now, when you're looking at that kind of a situation, these are specific levels where you'll be able to identify reversal zones, which is what we'll jump into once we identify our levels. But this is why it's extremely important to have these levels. If you don't know where price can get rejected, what is the precursor to taking a trade, especially if price is moving against you, well, if you don't know how to identify those and you take a trade, you're probably going to hit most of your stop losses. You are probably going to struggle taking any trades, profitable trades. You're probably going to see a lot of FOMO come in. You're probably going to try and do a lot of scalping, but you're going to end up taking a lot of trades just to make a little bit of profit. So as a new trader, that's something that you want to avoid. Okay, and that's why we're going to try and do it how a master trader would. So let's get started. When you are trying to set up your zone, especially for the start of the week, mid of the week, end of the week, trying to look at different areas, trying to identify the story, you have to make a habit of drawing up these charts either every day or every other day. So if you're trading gold and you're planning on trading gold, draw these levels every day or every other day, just so that you know where these levels are. You know what to expect. Okay, this is a monthly level or this is a weekly level. You'll know all of those parts. Now, how do we identify those levels, right? So first step is you obviously want to be able to use trading view, or you can also use your MT4 or MT5 charts to draw these lines, but you always need a horizontal line. Don't use a horizontal ray. It gets kind of messy. Create templates. For example, I have templates set up here: daily resistance, daily support, monthly resistance, monthly support, weekly resistance, weekly support, right? Because we are going to look at the monthly chart, the weekly chart, and then the daily chart. And that's going to be the order in which you're going to be marking up your charts, right? We're always going to look for drawing it out monthly, weekly, and daily, and then going into the smaller time frames. Okay, so let's get started with that. Let's go into the monthly. Okay, here we are on the monthly. Now, when you look at the candles, there's 4 things that you should know always, right? Bottom wick to top wick. This means this is the lowest point that price reached in that given month, the highest point the price reached in that given month, and then the price at which it opened if this is a green candle, the price at which it closed. If it's a red candle, the price at which it opened and the price at which it closed. And the same thing, highest point it reached, the lowest point it reached, and so on. So once you know that this is the situation, you should always be looking at, okay, what's the highest point price has reached historically? Okay. Highest price has reached is this here, 2076. Well, not 2076 actually, it's 2075.282. Let's just put it there for now. Okay, let's keep it there. And now, next step. This is the historic high. And we want to call this template monthly resistance. Because price is headed down right now, we would expect for price to come up here. This is the area of rejection, right? Now, how do we mark up all the charts? Okay, now this is what we're seeing. When we have these candles here, we always want to consider if there's multiple locations where a body is getting touched onto a specific line, that has a higher weightage because price struggled to close, especially on the monthly. Price struggled to close below that line. That means price is getting rejected at that level, right? Even if it broke through, went down, we can always consider that as a fake out, a struggle to move further down. Okay, so what are we going to do here? Well, we are first going to mark up these two bodies here, and then we're going to check on the left hand side. Do we have any more bodies showing up there? Nope. We do have these two bodies here and these three wicks here. Okay, so if we adjust this a little bit here, I think that makes better sense. So we still have two bodies here, a third body, kind of, fourth body, fifth body, for 1 wick, 2 wick, 3 wick. Okay, so we have a decent line here. Let's call this monthly support, since this is where we can expect price to drop down to. Now let's also look at, when you're doing all your daily analysis, you should always mark, so this is the previous month. This is the previous month high, the previous month low, the bodies, top and down. Okay, this is what you should always do. Now, when we put this in, what do we see here on the left hand side? We are seeing another top wick. Okay, the body, seeing two top wicks and a body doji right there. Okay, we're not going to count this body here because this is a continuation of price towards the downside. If this was a green candle towards the upside, I would count it as a second body here. Okay, because price still rejected and couldn't close below. In this case, we have gone down. If this month fails, this is the ongoing month, if this fails to close below 1964.5, whatever this level is, we will say that it got rejected, and that's when we will count for it, right? This is the ongoing month, so we don't want to consider that right now. Now, previous month high. Okay, these are two areas, two bodies right there. Okay, do we have anything? We have nothing here. We'll look at it on lower time frames, and that's where we want to look to see if any of that makes more sense or not. Okay, now this one here, I do think this here is a better area of rejection. here. Since we do have two top wicks here, but these bodies are close. This body is a little bit higher. So the bodies are not aligning enough. We don't have enough bodies aligning basically to say that this is a higher level or this is a lower level of resistance. So, okay, that's the area that we'd be looking at. It's the bottom of the previous month. So that makes second sense, so that in the recent history, price has rejected at that point and we are headed back to that point. Okay. If price was to break through further down, what's the next level that we can expect price to get rejected at? Is this a level? Yeah, this is possibly a level, right? Why? Well, you have one body rejection, second body rejection, third body rejection. So 3 bodies means, yes, possible area of rejection. Let's look at this possibility as well. So in this situation, we have one body, 2 bodies, and 1 wick. Well, we kind of have 2 wicks. So this technically has more rejection than these 2 bodies here. So this would take more precedence. Okay, so this is the other level. So let's call this monthly support. Call this monthly support. Monthly resistance at this point. Template, monthly resistance. Okay, so this resistance area was identified based on the monthly. Same for all of these. So these are all monthly levels. Okay. Perfect. Now, obviously we can mark up further down, but I think this is enough for now to look at it. Let's go to weekly. And now at weekly, we're going to see and adjust if we need to any of the levels that we have. 1 wick, 2 wick, 3 wick, and if we go back, we have 2 bodies, 1 wick, 3 bodies, 4 bodies, 1 wick, 5 body. So yes, this is a strong level. Okay, we have more bodies here than wicks, so it's accurate. So we drew this on the monthly. This is what I want you guys to learn now. We drew this on the monthly, and now it is aligning perfectly with a lot of levels, multiple areas historically on the weekly. So the lower time frame is now respecting these levels, is the evidence that you're seeing, right? So this is nothing that we are creating out of the blue. The market has already created these areas. We're just marking them up so we can see the chart more clearly. So let's enhance this a little bit more. Okay. Let us look for any weekly levels. Okay. Is this a weekly level? Yes, possible weekly level. 1 wick, 2 bodies, 3rd wick, almost a 4th wick. So yes, definitely a weekly area of resistance. Okay, mark it up, label it, and let's move further on. Now, do we see any other areas here on the weekly? Is this an area here? Not quite so. Is this an area here? Possible. 1 wick, 2 bodies, 3 bodies. That's it. So minor weekly resistance, weekly support, sorry, in this case. Let's look for more. If there's anything else we see here, is this something that's there on the weekly? Another minor area of rejection. So 2 bodies, 3 bodies, 4 body. Kind of a wick. Another wick. That's it. Another minor weekly area of support. Okay. Think we have decent amount of data there. Is there anything here? This could be another area, but okay. Let's just let's mark it up. You know, I know it gets extremely messy, but don't worry about the mess. Okay, you need to have a clear picture instead of worrying about keeping it clean. You can worry about keeping it clean after. Okay, we kind of do have a doji here right at that body. Another body, bottom wick, top wick, another body, and another body. So yeah. This is also another possible minor area of resistance. Why? Bottom wick, bottom wick. Nothing here. 2 bodies, 3 bodies, 4 bodies. So this is a comparatively stronger weekly resistance area. Let's mark those up. Now we're going to go into daily. And now we're going to look at those. How much of it is being respected, right? So we drew this weekly resistance area. Price struggled to close above on the daily. Next day we go up. Okay. Monthly support. Look at this. Price taps, gets rejected, and boom. Jumps up. Okay. Now we're looking at the daily. Now daily area of support. So recent history. This looks like a good area. Bottom wick, 2 bodies. Okay. 3 and 4 bodies. Okay. Further ahead. Another wick. Top wick here. Another top wick here. And another top wick here. Okay. So we are good. 2 bottom wicks. And so on. So this is definitely a decent level of support. Doesn't have a lot of bodies, but well, it has the same amount of bodies and wicks, so it's good. Good enough for me. Okay. Let's look for more. If price was to continue further down, what are the other areas? Hurdles. That's what we're trying to identify, so that we don't get stuck in an area where there's too many wicks. So like, look at this. There's too many wicks. 1 wick, 2 wick, 3, 4, 5, 6, 7, 8, 9, 10. So a lot of wicks here. So in this area, this is a no trade range. Now you've identified a no trade range. This is where you don't want to be stuck in a buy or a sell. You either want to buy above or you want to buy below, right? Another way to look at that is margin of error. That's something that we'll talk about later. But this is generally an area where price can respect or might not respect. It might just boom go down. It might respect and go up. However, you can never say so. Why? Now look at this. When price went back up, came back down, struggled, got rejected at this area. However, this time when it came back down, it struggled to close here, went back up, came back down, and then took support here. Historically, it hasn't taken support when coming down there. So this is why this is an area where you never know what can happen. A lot of wicks between these areas. So these are margin of areas where you can take errors. That's why we call it the margin of error zone. So, okay, we marked it up. Let's look at if we adjust it, if it does anything. One bottom wick, one top wick. We have multiple wicks here. Another top wick aligned. No bodies. Okay. So, okay. This is a minor daily support. Okay, works well. Let us look at any other daily areas. If price was to break through below here, what are some of the other levels that we can expect price to? Maybe this year. So you have two top wicks. Kind of have two bodies. One bottom wick, two bottom wick. Another top wick. Two bodies. Another two bodies. So this is a decent level of sorry, I was looking at the wrong thing. This is the one we are looking at. Two top wicks. Bottom wick, so not that much. Top wick. Minor area of daily support. Let us try to adjust this to just the bodies and see if anything changes. We do get a bottom wick there. Okay. Indicates a possible support on the way down. We got another body here. Two top wicks, two bodies. So that is going to be a better and more accurate area. Okay. So we have that. Okay. So I believe right now we have enough areas that we can expect price to reject. Now let's take a quick snapshot mentally and look at these levels based on the recent history. So monthly resistance based on this high here. Let's adjust it to that. This area is monthly resistance. Let's go further back. Let's make sure it's properly aligned. So this should be a little bit above here. More accurate. Two top wicks. Almost two bodies. Almost another top wick. So this is a minor monthly resistance area. So we have three top wicks. Okay. So a decent one. Let's look at this. Two bodies. Three, four bodies. Almost a top wick. Now remember we drew this based on the monthly. So almost another top wick. So we just adjusted a little bit. Let's see how much of that changes. Well, not significantly much, just slightly little. So that's fine. Okay, this is good. This is also good. A lot of bodies on this here, on the monthly resistance. It's definitely a strong area. And we can definitely see the evidence. We have struggled to move past up there. And then when we were there, we've consolidated in this range quite a bit. And if you look at this, so if you look at the daily right now, a lot of consolidation at different sets of levels. So this zone here, and this zone here, a lot of consolidation. Symmetrical triangle, price struggling to go up. We'll look to see if we have any more indications there. But yeah, when you know all of these different things, symmetrical triangles, candlestick patterns indicating some kind of a reversal, like all of this information definitely helps you identify good areas for trades. Okay. So let us see. Okay. Now let's go into, we have a lot of daily levels, daily, monthly, weekly, and so on and so forth. Now, let us go into the 4 hours to look at what's happening at these levels. Okay. Daily support. Okay. Multiple rejections. Fine. Moving down. Okay. Now, this area here. Right, let's go back to the daily to see. Yeah, so we haven't marked this here. 2 bodies, top wick, another 2 bodies, bottom wick, a bunch of bottom wicks. Okay. See if we can adjust it a little bit. This is fine. Okay. Bottom wick, a bunch of bottom wicks. So I don't want to mark up every level here, but if you look at it, it'll make more sense to you. So these 2 bodies, this candle and this candle here, these 2 wicks definitely took support over here. And again, this is something that you'll end up creating a lot of lines when it comes to consolidation areas. So these 2 bodies, you'll see a lot of bodies respecting that area there. Okay, so you just you don't want to mark up every consolidation area, but you always want to know that, okay, this is an area where price does consolidate. Okay, so great. Let's go back to 4 hours. Let's see what is happening. Consolidation area here. Let's go historically to see another consolidation area here. So this area here now, just based off between this weekly line and this monthly line, is an area where price definitely does reject. So once price came back into that area again, thrice struggled, went up thrice. Let's look further back in history. Got pushed up here. Not a lot here. So this is pretty much quite recent. So this zone here, or trying to create support in that area here, is quite recent. Right? This area here, it's a quite recent area. 2003. Yeah. So we do have a little bit of consolidation. So yeah, we do have a decent amount of consolidation in this area. However, recently it's consolidated in that area quite a bit. Right? So we have our levels. Great. Now, is this a possible area? This is on the 4 hour. Let's see if we can find something here on the daily. Yes, definitely possible. Right there. Let's mark this up. 2 bottom wicks, top wick, a body, another top wick. So definitely a decent level. Let's look at historically. Almost. Let's adjust this. What did that do? That didn't do anything. So we pulled it back down, and these bodies here don't do much. Minor area. So this is daily resistance, and this is daily resistance. Okay. So we have marked up quite a bit. So we have bottom wick, bottom wick, bottom wick, 3 bottom wicks. Okay, good. Decent enough. Kind of 2 bodies. So it's good. It's good enough. Okay. Nice. Now let's go into 4 hours. Let's look at so what's happening with price here? Price got rejected. Okay. Went back up. Bullish. Got rejected at this area here based on the 4 hour. Fine. So these are some daily areas that we've drawn here. Look at 1 hour. So this area here has a lot of consolidation in the past, even recently. So, okay. We've broken through the weekly resistance on the 1 hour. So now on the 1 hour, let us see if we can adjust any of this. Let's go to daily. Well, okay, a little bit better. 2 top wicks, 2 bodies, another bottom wick. Okay. So this is an area where price has rejected previously up until monthly support of 1931. Now 1919 706. That is the weekly area that we drew based on the weekly chart, and that tells us so 1936 we do have a good area of rejection if price was to drop down below. Does it have the scope to? Yes, it does have the scope to drop down to that level. But what is the story that these levels drawn here are telling you? Well, what these levels are telling me right now is, yes, price dropped down here, price rejected, struggling to move up. So struggling to move up. What it can do is there is probably a 4 hour support here. Yeah. Which means go into 1 hour, look at it, what's happening. Okay. Price struggling, an area of rejection. So these are spots where if you have trend lines and other things, that's when you can take an entry into, right? Now you have your levels, you know what's happening. Now you can look at the story. Okay, there was possible trend line here, price got rejected, news kicking in, giving it the momentum to break through the daily resistance. Price did struggle at the daily resistance, monthly resistance area on its way down, and then it just continued down. So effect of news continued. Momentum is still ongoing. It is slowed. Let's see what happens through New York, but this is pretty much what can reverse out. So let's go back into 4 hours. Let's go back into monthly. Now this is what we've done is we've drawn the zones, right? Now we want to identify how we can take a trade. And that is dependent on the analysis that you do. Now we have zones that are telling us these are the areas where price can get rejected. We have major and minor. And when we're looking at 1 hour, this is what we're trying to confirm. This is the chart we see. How many times has price rejected in the specific area that you drew based on the monthly? You're definitely seeing something here, right? Definitely seeing something here, monthly, and it is spot on right now. So this is why it's extremely important for you to draw levels based on different time frames, because you will find the correlation of these levels with candles on lower time frames. Okay. Now look at this. This is on the 1 hour, right? These two candles popped up, got rejected, went back down, struggled on the monthly, went back down, right? So here, look at the high, perfectly aligns with this green candle's top wick. So you'll always find some correlation, and it's important to draw these levels based on those correlations. So now if you're drawing anything on the 1 hour, this is what you want to see and do. So you generally want to mark that up as a dotted line. So you know that this is now on the lowest time frames, 1 hours and 4 hour, right? I don't generally mark up on 30 minutes, but you can go down that route. But 5 minutes, 15 and 20 and 30 will generally respect the zones created by the 1 hour. So you should always have your charts marked up until the 1 hour chart time frame. So once you have these marked up, you want to look at the trend, the overall trend. So whenever you're taking a trade on any pair, you need to have an overall outlook. What do we see on the overall outlook? Price going up, okay. So trend line. What is a trend line? Well, trend line is basically, it is still a kind of a level. It is kind of an area of support or resistance based on where the price is headed towards. This here represents the movement of direction, considering that support the price has respected while moving topside. So the monthly tells us gold is bullish. Great. Has 3 touch points. It needs to have 3 touch points to say that that the trend line is confirmed or that support has any significance. Okay. So you have 1, 2, 3, 4. Okay. We've aligned it accordingly. We do see a small fake out there. This is where we are considering that it started out. Okay. Great. Perfect. Price is going up there. This is a monthly area of rejection. Okay. So 3 bottom wicks, top wick, body, 3 bodies. So, okay, good enough. Now, let's look at the top. Let's delete this because of this. Let's draw this here. And look at how well this trend line aligns. 3 touch points. Right? So keep zooming in, narrow it down so that on lower time frames it'll make a little bit more sense. So first, second, and third. So if you were taking a trade from the bottom, this could have been your final TP, right? You could have expected that price is going to tap into this trend line here and then taking your trade based off of that. So this is why drawing these levels is really important. Okay, let's go into the weekly. Let's see if this trend line is still aligned. Yes, it is. Let's go on into the daily. Yeah, it's good enough. Still good enough. Yeah, perfect. Okay, so this is good. Now, let's look at the recent history. So we're probably going to find more, trend lines across this area, symmetrical zones, and so on and so forth. A lot of different concepts, but we'll keep it simple. Zones and trend lines, because we're trying to identify possible areas of rejection, possible reversal zones. So let's draw this trend line here. Is it forming? It is kind of broken, and then so kind of fake out if we are expecting it. Does this form? No. Let's consider this to be a possible trend line, right? 1, 2, still not formed or not confirmed. We probably should be looking at another tap before it goes down to confirm this one. Okay, that's fine. Let's look at it from this angle here. Does this give us a trend line? Well, it kind of did, but it's been broken, right? 1, 2, and 3. We have 3 legit touch points. It broke above, closed in range, and the next candle continued, tapped in, took support of the trend line, and then pushed up. Okay. So this is an accurate trend line. Great. So 1, 2, possible area of rejection right around this area if price was to come back up. Okay. That hasn't happened. So we did reject here. Price continuing its bearish movement. Fine. Another possible thing is this here. Right? Don't worry about the chart getting messy. It becomes a bit more clear on the lower time frames. Okay. Zoom in and make sure you mark them up. Okay, looking good. Okay, good enough. 1 and 2 touch points. Okay. Is there a possible bullish trend line? Let's consider this point here. Do kind of have 1, 2, and 3 touch points here before price went bullish. So this is a possible trend line. So if price continues to drop, this is where we can expect price to take support somewhere along the intersection of this weekly support or this monthly support here. Okay, this is on the daily, so we can expect somewhere around here if it continues. Okay, let's see if there's any other. The lowest point. Let us consider this. So it broke through, went up, and it's kind of broken through there. See if this one makes better sense. Okay, Now look at this. 1, 2, and 3 confirmed. Headed back towards the bullish trend line, and price can go above. So now you have identified a reversal area. So we have identified a zone where price has the potential of reversing. Let's go into 4 hours, take a close-up picture to see what that level is. And as we said, adjusting this. Okay, aligned, perfectly aligned on the 4 hour. Let's look at the same thing on the 1 hour. Okay, both these candles rejected the same area. Perfectly aligned. Our second touch point. And then our third touch point. Okay, great. So this trend line is definitely confirmed. Okay. So this is where we are, and this is today's day. Price is continuing to make its drop towards the downside. That means we can definitely expect price to reject at this spot here and then go up. So that means now we have identified that this is a potential spot for you to take a buy, expecting a rejection, right? Obviously, there's more things to look at, news, sentiments, and so on and so forth. However, there is a huge chance of you taking a buy here. And then when you're trying to take your stop loss, you have a daily support area, expecting the price can touch in here and then get rejected. If it's news, so this is a strong daily, weekly trend line. That means higher chance of price getting rejected there. At this time of the day, there's no news coming out right now. If in the morning during New York session, when the news is coming up, which is at 10 a.m., that is when we can expect, if it's powerful enough, it could break through the trend line. However, since it's not 10 a.m. right now, there is a significant amount of time and reasoning for price to reject at this area and move further up. Now, when we say further up, we could be going back up to the trend line. Okay, this trend line here. So what could be our potential targets? Well, we could potentially look for it there. Now, this is how you would set up your final take profit, your entry. Now, you can obviously get the entry a little bit leaner, a little bit cleaner. How? Well, now this is where we would use array. This is what we are seeing, right? So this is potentially a good point of taking an entry. Right here. Okay. One bottom wick. Bunch of candles getting rejected at the same spot. Again, same thing here. So high chance of price giving you a better entry here. Now, what would be a stop loss? Well, your stop loss would be somewhere around here. Okay. 55 pips. Right below this wick here. So you always want to keep some space above and some space to the downside when you're taking these trades. Now, obviously, you can adjust the entry a little bit to give you space to adjust the pip size of the SL. So you have a 50 pip stop loss and you have a good buy. So this is the trade setup for today based on the zones and the trend lines that we have drawn, right? Now, what are some of the key points to remember between all of this? A quick recap. When you're drawing these zones, number one, bodies take priority over wicks. Identify if a lot of bodies are getting rejected at a specific point, then wicks are, okay? Next thing, you always want to identify historical levels. Are these the levels where price is rejected historically? Go to the farthest past that you can go to and identify those areas, okay? To identify some of the major zones, look at reversal areas. How often has price rejected a specific zone? If you want, you can mark it as a specific as a specific point. Okay, this is where price is rejected quite often. This is a strong area. Give it a different color. Note it down. Write some notes there, or put up a text, something on your chart to indicate to you that this is what can happen, right? Always start with the monthly. Look at the story from the monthly to the weekly to the daily, right? As of today, what story we're seeing is there is a trend line that's coming in from the bottom. It has 3 touch points. It's accurately monitored. We went into the lower time frame. We adjusted the trend line that we drew based on the weekly, moving into the daily and moving into the hourly. And now we've adjusted it to see where price has a potential reversal area. Draw as many lines as you need. Draw as many trend lines that you can see. And why I say you should do this every other day? Well, because when you are doing this every other day, you will end up finding something that you missed when you're drawing the charts initially. And that is why it's really important. When you're taking a trade every day or you're planning a trade for the next day, if you don't know these areas, if you don't know where price can reverse, if you don't know where price can get rejected, if you don't know a lot of things about these prices, you will take a loss. And that is what you're trying to avoid as a trader. So follow specific rules, create your templates for these zones, mark up your zones. It's fine if it's messy. Messy is good. Okay, just like the footballer. You want to make sure that you have the perfect areas to take a trade on. If you can't find those, so for example, say this is a major resistance area. When price breaks above, it will end up retesting that area. When it does, that is another area that you can take an entry. So if you missed this entry, you can still take an entry here. But do you see any good entries in between? Well, on the hourly, this is possible area. So you can go back to the higher time frames and see what's happening here. Is there an actual area that you've maybe missed? And so on and so forth. For each and every pair that you're doing, you have to do this. You have to spend a decent amount of time to try and build out all of this so you have a good structure to take trades within. If you don't do this, you're going in blind and you're doing nothing else but gambling, which is not the way to take this trade, right? Which is not the method of trading. You are an analyst before you are a trader. If you cannot analyze what's happening in the markets, you cannot spend your money or somebody else's money on these trades because you have a higher chance of losing, right? It's just like walking in blind somewhere into the dark. You can't see anything and you're just saying, okay, it's a clear path, I'm just going to keep walking until you fell into a deep dark hole that you cannot get out of. In trading, that's pretty much losing or blowing your accounts. Okay, so you don't want to do that. So you want to try and identify good trading areas, smart trading ideas, and then efficient trades. That's what these levels are going to help you do. So that brings us to an end on this specific point, and we'll obviously introduce more and more content. So if you haven't already, hit the like and subscribe. And yeah, follow us for more for live signals and trades, and join our Discord for any free mentorship. Have a good one, stay profitable, and keep marking your levels.